Now, Fed presidents have been signaling this week that they will stay the course on rate hikes. Main Street Asset Management CIO Aaron Gibbs is here, and Geltrude and Company founder Dan Geltrude as well. It's great to have you both here. And Aaron, I guess we'll start with Powell. You know, we don't know what he's going to do in an hour, what he'll say, but if he kind of reiterates what we've heard from him before, we're going to react to the data, we're going to stay the course. That's 50 basis points for December.
Yeah, I mean, that's pretty much where the bets are. So I think that will keep the markets sort of steady. Now, we've had 4 days of sort of risk off, markets down. I don't think it's going to make the markets jump up. I think we'll sort of stay in this risk off trend of sort of retracing a bit of the euphoria, sort of the euphoric sentiment that was in October, that started mid-October, and just sort of stay the course, because we're still really just waiting until December. It's, you know, I doubt.
In what way, though? What do you mean?
Until the actual numbers come out, until the actual, until the December meeting.
Okay. I'm like waiting for something else to change. But at this point,
so
I think
he's
we're on course.
Say something dramatic, like something really shocking. Otherwise, you know.
No, this is Jay Powell. I'm predicting nothing shocking. But anyway, Dan, what do you say? I mean, it's, you know, he does move markets. He's done it before. We'll see what happens today.
Right. I mean, who knows exactly what he's thinking, but it seems like the general consensus is he's going to go 50 basis points. You and I had spoken before, and I said, you know, I think he's going to go 75. Now, I actually think he should go 75. Why?
Do you like red numbers, Dan?
Well,
do you like economic destruction? Sorry.
Well, it's for a different reason, right? So I see it this way. He is pushing us towards recession. There's no question about it. And that's the end game to get rid of inflation. So why not just go in? What he's been doing to this point hasn't really been solving the inflation problem. Yes, it's coming down a little bit, but the dramatic steps that he's taken, still not working. But the recession, that's working.
I don't know, Aaron. I mean, what do you say to that?
No, I would say actually, like, inflation has come down. We've had about 5 months of a declining trend. No, it shouldn't happen dramatically, because that usually causes more turmoil. And just looking at the job reports, we're not heading into recession so far. We're still heading towards slower growth. Let's remember, we still have 1.7 jobs for every person that's looking for a job. And so that's still a robust economy. And if we do have slowing GDP growth, and obviously we've seen revisions that look like third quarter was a little better, I mean, we're not looking at a massive contraction.
Well, you know what, Aaron, here's what I think is happening. We're all getting kind of numb to this data. And what I mean by that is we're at 7.7% CPI, and we're saying, well, that's a positive side, because directionally, okay, it's coming down. But that's still a terrible number. And why are we?
But you can't undo. It took us 18 months to get there. You can't undo it in 3 months. And so I think if it takes us 9 to 12 months to slowly undo it without causing massive recession, that's a more healthy trend for just general sanity.
Well, but what we've heard from Bullard and from Williams, to be clear already this week, is that, you know, they believe that we stay the course. And that means we're going to be hiking rates until the middle of 2023, the summer. And unfortunately, what that's doing is that I think another couple of quarters of negative growth, I think, is very possible because of that. And you hate to see it, because Americans are already suffering under higher inflation.
Absolutely.
You know, a lot of companies are starting to lay off. And we're not seeing that in the data yet, but I think today might be the final little tip to say, okay, you're going to start to see those layoff notices really. And ADP said today, and that week number was 127,000. They said workers are not really quitting now.
Right.
They're looking around and going, oh, I don't have a better offer.
Right.
Guess I'll stay right where I'm at right now.
But
that's the first tip.
But I think again, that's more of saying that we're just in a more normalized economy versus a red hot economy. And so, and if we get through, look, it's not that I don't think we'll hit a recession, but if we can just handle a 2-quarter recession, the U.S. market is very good at bouncing back. Now, a lot of it has to do with what else is going around in the world. It's not just Powell that could really be able to pull us in or out in the longer term, but 2-quarter recession is something that Americans, at least for now, have enough cash, enough jobs to get through, though it may be painful.
They are
it won't-
digging into their savings, though.
Exactly.
Really good. Last word, Dan.
And going to credit cards. Look,
Yep,
we're
and
on a
charging.
path of death by 1,000 cuts, right? And we're attacking the demand side when this is a supply side issue. So, I mean, that's the path we've taken. It's not the right path, but
I love this conversation. You guys can go have this in the hallway. I got to do something else. Thank you. It's great to have you both here. Love it. All right.